How much would it save you in your life if you understood taxes this much more? Welcome to the Impact School of Money, where our mission is to change the way that people are educated about money. And this is episode 8. There are 3 purposes for attending this class. Purpose number 1 is to learn real-world rules of money, and today we've got one that shockingly is something that people should be a lot more aware of than they are. Purpose number 2 is to learn how it works, or the basics of how a financial concept works, and then how it applies. What we're going to talk about next is how it works, how different things work. I mean, you think about it, how much would it save you in your life if you understood taxes this much more? I mean, think if you're a business owner and the amount of taxes that could be paid in a year, in 10 years, in 20 years, or even if you're just an employee, the amount of tax we are paying that we maybe shouldn't pay. That there's a deduction that we're missing. There's an exemption. There's something that we're missing. And so the better we understand taxes, it could literally save us thousands, tens of thousands, hundreds of thousands of dollars in our lifetime. Now, I'm not a tax professional, but we work with tax professionals. I encourage everyone to find a competent tax professional that they can work with, be it a tax preparer and a CPA, both, several of each, to bounce ideas off of as you go throughout your financial life. But in working with people over the last 13 years as a financial professional, I've learned that a lot of people, agree or disagree, spend their money to stupid places to sit and do nothing until they either get it back or they don't get it back at all, and just money is just going to dumb places. We're not looking to change people's personalities, but they do need to change some habits. And we'll talk about that here in just a second. But how it works, how taxes work. And this isn't something that is taught in school. And I wish it was, but the reason it's not taught in school is because probably most of the professors are wondering the same thing. How do taxes work? So there's a couple of words that we hear when we do our taxes. We hear the word exemption. We hear the word deduction. And then we hear the word dependent. I'm just going to abbreviate that because I don't know how to spell dependent, I don't know. Anyway, I'm in finance, not in English, right? So I can teach this even if I don't know how to spell. So here we go. So what is an exemption? An exemption is on our W-4 form when we claim, and we're basically telling the government, take this much out of my check. We're telling our employer, take this much out of my check and send it to the IRS, and that's what an exemption is. What's confusing sometimes is some people take these two and they interchange them, and they think that dependents and exemptions are the same thing. Are they the same thing? No. What a dependent is I have as many dependents as I have. I have a wife, I have 3 daughters, I have a dog. He's kind of dependent on me, but I don't get to claim my dog. But I can claim them as dependents because they're dependent on me. That's an easy way to remember it, right? An exemption is all that is doing is just telling your employer how much to take out of a check to send off to the IRS, and that's what an exemption is. Okay? A dependent, I just explained, but what about deductions? How do deductions work? Okay? So here's how it works. If I make $50,000 a year, and I have a house, I get to deduct the interest I pay on my mortgage payment, right? So that is considered a deduction. I get to deduct interest on a home. if I own a business and I have a home office and I have a little phone in my home office and that phone costs me $100 a month, I get to deduct the cost of that phone. If I have a car for my, I use my car for my business, and I had a company make a little magnet that says, Adam Professional Services or whatever it is my business is, and I slap that magnet on the side of my car. Well, working with my tax professional, I get to decide actually if I want to deduct the costs of that car, the payments, the gas, the car washes, the oil changes, the maintenance, everything, or I can deduct the mileage. And so basically what it is in the whole is that we have our gross income, and those are fun words to think about sometimes, is we have our gross income, and then we have our net income. Gross is going to be everything that comes in, every dollar, every penny, everything, and then the net income is after taxes is taken out and after health insurance is taken out if it's a payroll deduction through our company, and then our net income is what we receive. But then you go do your taxes and there's adjusted gross income, and then there's your net, total net, and there's all these different words. If you have a business, there's all your profit and loss stuff. So there's all these different words, but it's figuring out really, like Calvin Coolidge says in that quote, is that taking too much taxes, paying more taxes than is absolutely necessary, in a way, is kind of a criminal thing, not just looking at it from the government standpoint, but looking at it, it's criminal that we're doing it, that we're overpaying, that we don't understand it, and that it's not taught. And so we need to learn these things, and if you're in the financial services industry, helping our clients understand it. Because what's funny is when it comes to exemptions and getting a tax refund, it says right on the W-4 form, if you claim too many exemptions, then you may owe at the end of the year. If you don't claim enough, you may get a tax refund. What's interesting is if you actually go to your tax forms, tax form 1040, open it, go to page 2, and it's lines 72 or 73. It actually says the words on there, this is the amount you overpaid. It says that word for word in bold lettering, and it's kind of the only bold lettering on the right-hand side of the page. All the titles of stuff are bold on the left-hand side. But on the right-hand side of that 1040, page 2, line 72 or 73, it says this is the amount you overpaid, and we're sending it back to you. Right? And so it's playing that game of finding out how much do I owe, what do I not owe, and understanding the difference between exemptions, deductions, and dependents, and paying in taxes what we owe and not overpaying and getting too much back. So that's our lesson in taxes for today. Really, what all of this boils down to, and now thinking about it, one of the top reasons that we decided to start doing the Impact School of Money is this word right here. Habits. Okay? Hopefully you can all see that. Habits, habits, habits. Okay, so far, up to this stage of your life, there's things that you've done that have gotten you in the money situation that you're in. The knowledge you have, the actions that you've taken, the habits that you get into are what form your financial life. It's not what you make, it's what you do with what you make. It doesn't matter whether you make $10,000 or $10 million. The rules of money are the rules of money. And so the habits, what are some good financial habits to be in? And how? And it's funny, you think about, if I was to go out right now, I mean, it's early in the morning at the time of this recording, if I was to go out right now and drive over to McDonald's and get 7 Big Macs right now, and ate all of them right now, is that really going to do anything to my health? It's probably going to make me really sick like immediately, but if I weigh myself tomorrow, am I going to be 20 pounds overweight for eating 20 pounds worth of Big Macs? Probably not. It's not, because that's not a habit. It was just a random, stupid thing to do, right? But what if I ate a Big Mac every single day? Every day, every day, every day, every day. Then it would become a habit, and then what would happen to my health? And so everything that somebody has done in their financial life, wherever they currently are, wow, I don't know how to spell, wherever somebody currently is, the only reason that they're there is not because they didn't understand taxes and the government this or my family that or whatever, because that's a decision to learn or not to learn, to seek out this information or not seek it out, get educated or not. But here's where they were when they started making money, and then they made these decisions, and it led them to where they are. And here's the thing. There's nothing that they can do about that in that moment. Wherever people are is where they are. But what they can change is they project out to the future of where they want to be. Well, if they keep doing this, they stay here, right? Money's not some magical thing that as long as I keep doing the same stupid stuff over and over and over, that magically one day I'm going to end up where I want to be. I'll just magically get there, right? It's finding the right habits that actually put me on a path to where I want to be. You know, if a certain set of habits, this is what I want, and there's a certain set of habits that starts taking me this way, is that getting me closer to where I want to be? No. And so it's adopting the right habits that lead me to where I want to be. And so habits like paying yourself first. Paying you first. Okay? Another habit is living, at least I would say, the 10-10-80 rule. The 10-10-80 rule. Okay? Pay yourself first, live the 10-10-80 rule. What's the 10-10-80 rule? That means pay a charity or your church, or give back, because we are given to, so we give back 10%, we save 10%, and we live on 80%. Well, what would have happened if someone from very young, here they are when they start earning money, or they start getting an allowance when they're a kid, or whatever, if they learned these habits right here and right here, then all the habits they have after that lead them to a good place where they look where they are and they say, oh my gosh, I'm glad, I'm excited about where I am. Most people don't look at their financial situation and say, man, I'm super excited about where I am. Why? Is it because they've been a victim of something? Maybe, but usually not. It's usually because the habits they adopted early that they continue to do got them to where they are, right? Imagine the habit of brushing your teeth. A long time ago, you didn't get in that habit. Where are your teeth going to be today? Probably not in your mouth, right? They would have brought it away. But you learn that habit, and you get to where you are. And you're like, well, yeah, but genetically I have bad teeth. Well, have you talked to a dentist about it? Have you ever gone and sought out professional help for your situation? I mean, it's funny. I have to hear a quote this morning that said, the longer you tell yourself excuses, you actually start to convince yourself that they're right. Because you just hear it over and over and over. It's like, oh my gosh, I must be right. And so it's getting out of the mindset of the victim mindset and saying, there are things that I can control, get in control, get the right habits, and get myself on track to where I want to be financially. So we had a little bit of extra time after talking about dependence, exemptions, and deductions today, and wanted to go over money habits and how important it is to get into habits that actually serve us long term. And one of the things that we'll be going over a lot in the Impact School of Money are concepts, principles, and habits that on paper should lead us to where we want to be, but then realizing something very important called human nature. Okay? If on paper the numbers say this will work the best, well, you have to realize that it's human beings that have to put those numbers into play. And so involving human nature in money decisions is a very important part of, in my opinion, why people need to work with a financial professional. I have a financial professional that helps me with my money, and this is what I do and have been doing for 13 years, so why would I do that? Well, I'm emotional with my own money. Someone else advising me on it is not. And so working with somebody is extremely important because they are not emotional with your money where you are. So thank you for joining us today on the Impact School of Money, and class dismissed.